Hi everyone, I am Karan and welcome to Karan's Gyan. The stock on focus for today is Mahindra and Mahindra Finance, and I don't have just one but two news about Mahindra and Mahindra Finance. So Mahindra and Mahindra Finance had its board meeting today. By today I mean 18th of July, and it came out with two announcements. The first announcement was more about its rights issue, and it gave details about its rights issue that it had been planning for weeks right now. And this second announcement was more or less a declaration. It was a declaration of its quarter one results. Now, let us understand both these announcements and try to decipher what Mahindra Mahindra Finance is trying to tell us, and pretty much understand how rights issue would affect us as an investor and whether the quarter one results are good or bad. Now, getting to rights issue. So this rights issue had been kind of astonishing for me because I have not seen this steep a discount at a good company. So Mahindra and Mahindra Finance is a mid-cap company. It has a market capitalization of about 12,000 to 13,000 crores, and it giving a steep discount in its rights issue made me ponder upon the fact that why is there a steep discount. Now, this might sound gibberish to you, but I would give you a good detail about it. So, getting to the rights issue is 1 is to 1. So, if you have one share of Mahindra Mahindra Finance, you are entitled for right to buy another share of Mahindra Mahindra Finance. So, the issue price is rupees 50. So, you can buy additional rights shares using the issue price of 50. And just so that you know, the current market price of Mahindra Mahindra Finance is 208 rupees. So look at this, the current market price is 208 rupees, but the issue price is 50. And moreover, the rights ratio is 1 is to 1. This is astonishing, right? That's what I was wondering. Now, the discount, if you see, is about 76%. 76% discount is really high for a mid cap company. Now, if you would be wondering what is the price impact of such a rights, such rights declared by Mahindra Mahindra Finance, let me first discuss a little more information and you can get a good idea. So the record date is 23rd July. So you need to have Mahindra Mahindra Finance shares by 23rd July for you to be able to subscribe to the rights issue and pay a steep discount of rupees 50 per right share, and the issue period would be between 20th July to 11th August. Now, talking about record date, since the record date is 23rd July, the X rights date would be in turn 22nd July. Now, what do I mean by price impact? So, when a rights comes at a discount in the market, there is basically a discounted price for the share for which the rights has come, or basically the underlying share, as I would put it. So, let me assume the price of Mahindra Mahindra Finance on X rights date is rupees 200. Right now it's 208. Let me just assume it's 200 rupees. It can be anything, so your calculation can change then. But let me assume it's 200 rupees. So there's a formula. This is the formula. I would give you a brief overview of the formula. X rights price is the price on X right day current shares. So basically, before the rights, Mahindra Mahindra Finance had 61 crore shares. Since the ratio is 1 is to 1, there would be twice as many shares post rights. So if you multiply this figure by 2, if you multiply 61 crore 77 lakh by 2, you would have 123 crore 55 lakh shares post rights, and hence the price would be decreased because of dilution, because of increase in number of shares. So the formula is X rights price into the current shares, which in this case is 61 crore, plus product of issue price into the rights issue size. So the rights issue size is again 61 crore because the ratio is 1 is to 1 and issue price is 50 rupees divided by new outstanding shares. These are the shares post rights. So the post rights shares would be 123 crores. Now we look at the formula, we look at the substitution of all the figures. We'll see 200 rupees is X rights price that I gave you as an example. 61 crore shares are current shares. Issue price is rupees 50, as I said above, and 61 crores is again the rights issue size, because the rights ratio is 1 is to 1. New outstanding shares are basically 123 crores 55 lakh, and if you calculate it will come up to 125 rupees. Look at the price dilution. There has been a 75 rupee gap, about 38% gap in the the price on X rights date and the price post rights date. So just so that this is the price impact. Do your reasonable calculation based on the X rights date so that you have a better idea. Now you might be getting a question in your mind: why is this rights issue price so less? Why am I getting a share that is worth 208 rupees for 50 rupees? Why is that? Mahindra Mahindra Finance is a good company, of course. It's a mid-cap company. Mahindra has a good name. It has a good value in the market. Why am I getting it at the price of peanuts? So, just so that this is my opinion. I would say this is my opinion. Yeah, so it can be different because I got a lot of hate comments when I gave my opinion in PVR video. But anyways, let me just highlight and say this is my opinion. Now, uh, number one, what's happening in the market? We are seeing a lot of rights issue come up. We have seen Ayatollah fashion retail rights come up. We are seeing Shriram transport finance rights issue. We are seeing PVR rights issue. Arvind Fashion's rights issue. A couple of months ago, even Reliance Industries Limited came out with the rights issue. So as of now, the liquidity is already low in the market. Over that, there's a cash crunch because investors are being attracted to a lot of rights issue. There are a lot of rights issue in the market, and as rumors have it, a lot more rights issue would also come. So Mahindra and Mahindra Finance wants to, position itself in the market such that it attracts a lot of investors. And trust me, at this price, I feel the rights are gonna be oversubscribed. So it wants to seem attractive to investors amidst so many rights offering. Uh, and if they had come with a higher rights issue price, a lot of investors would be turned off and would be turned away. Number two, quarter one results might spook investors. So, like I said, they came up with two announcements. They came up with announcements of rights and they came up with declaration of quarter one results. And after seeing quarter one results, it seems that a lot of investors might be spooked, they might be scared because they have had high impairment in their balance sheet. And this high impairment is coupled with slowdown in the industrial vehicle sales. So what Mahindra and Mahindra financing does is it finances people who want to buy vehicles, be it a new vehicle or be it a pre-owned vehicle. It will finance them. Now, if there are no sales of vehicles in the market already, how will they finance vehicles? Because they need vehicles to be sold for them to finance buyers. If there are no buyers in the market, how will they finance buyers to buy vehicles? So there's a lot of high tension amidst sales in vehicle sales. So just so that Mahindra Finance has these many businesses. So it has a lot of subsidiaries also. Its businesses include vehicle financing, loans for auto, utility vehicle, tractors, cars, commercial vehicle, construction equipment. They also have pre-owned vehicles financing, loans for pre-owned cars, multi-utility vehicles, tractors and commercial vehicles, SME financing, personal loans, mutual fund distribution. SME financing is small and medium enterprise financing, insurance broking, housing finance. These are subsidiaries, but their main businesses are the top three. However, I would say the main business is vehicle financing and pre-owned financing, pre-owned vehicle financing. and there are no vehicle sales happening, so the financing is a little bit of trouble for them. Now we look at the quarter on quarter results. For you to get a better idea about Mahindra and Mahindra Finance, like I said, they release their quarter on quarter results alongside the announcement for rights issue. So interest income is basically flat. Financing costs have decreased by 2%. So what is this basically? Mahindra and Mahindra Finance is a financing company. So it would raise money from the market through loans, debentures, bonds, and would use that money to lend it out. They would lend the money they raised to buyers of vehicles. So the money which they have raised from the public, they would give it out as loans to people who want to buy cars or want to buy pre-owned vehicles or want to buy construction equipment, or they'll give it as loan to SME enterprises. So this is basically their business. So they would give out loans at a higher interest rate, and they would borrow money from the public at a lower interest rate, and whatever is the difference between the interest rate, they would eat it, and it will be their profit. Basically, not profit, I would say the revenue. So their interest income has basically been flat. If I look at quarter on quarter, I'm comparing quarter 1 results to quarter 4 results of the last financial year, and I see it's flat. Basically, financing costs have reduced by about 2%, which is, it seems nice. Impairment on financial instruments. Now, this is something to worry. The impairment of financial instruments have gone up to 948 crore rupees compared to last quarter where it was just 821 crore rupees. This is about a 15.5% jump. Not a good news, but if they control these figures, it can be good for them, and it can be good for their profit and loss sheet. So maybe this is the figure that is spooking investors as to why is there impairment in financial instruments. But it is not just with this financing company, it is not just with Mahindra and Mahindra financing company. If you would have seen Punjab National Bank's housing finance group, if you had seen their result, even they had high impairment. Even India Bulls Housing Finance had high impairment. LIC Housing Finance also had high impairment. So this is not just with Mahindra and Mahindra Finance. It's with a lot of financing companies. The financing companies seem to be in big trouble. That's why they are giving shares at a discount, because they want to attract investors. And Mahindra Finance is a good company. It's only that the industry is in a downturn, and the industry seems to be in troubled waters. But don't worry, even if you subscribe to the rights, I promise you Mahindra Finance would come out of these troubled waters. It has got a strong management, and it has got, key drivers that will be able to push it out of these troubled and muddy waters. Getting back to the results, profit before tax has taken a hit about 12% year on year results. So quarter on quarter results give us a short term view, year on year results give us a long term view. We see year on year results compared to June quarter in last year, we see it has grown, the interest income has grown 10%. So has financing costs. But something to worry again here is the impairment of financial instrument. It's about 40% increase. Just so that you know what is impairment of financial instrument. For example, Mahindra Finance gave out a loan of 10 lakh rupees, and now they anticipate, because of downturn, the 10 lakh rupee loan is kind of gone to, a toss. It has gone for a toss. They feel the 10 lakh rupee loan won't come back entirely. They feel only 8 lakh rupees would come back from that 10 lakh rupee loan. Hence, they'll be facing a loss of 2 lakh rupees. Hence, they would correct it in their balance sheet beforehand, so that their balance sheet is not suffered when the loan comes to an end. So they'll basically provide provisions for it beforehand itself, just to make sure they're on a good side and they have cash reserved for this bad loan. So the impairment of asset here is 2 lakh rupees. 10 lakh rupee loan that has been given out, and only 8 lakh rupees coming back. So the impairment of this financial instrument, where the financial instrument is the loan given out, is 2 lakh rupees. 2 lakh rupees is the impairment. Now, profit before tax and exceptional items. Now, this is something which I like. It has grown by 80%. This is something nice. If they are able to control the impairment in financial instruments, which they will be able to control once this moratorium is lifted, once market comes to a better position, comes to a better standing, this should be solved, and Mahindra Mahindra Finance can go to the heights where it was earlier. Now we look at the loan book. So the loan book for this quarter is for auto and utility vehicles is 23%. If you look at all these figures, we see only tractor loan book has increased from 17% to 34%. Now, why is that? We know rural growth results have been robust. They have been strong. They have in fact beaten urban results in in many years. Since many years, urban areas are performing better in sales, but now rural areas are destroying the sales records of urban areas, and hence are performing better. As a result, tractor loan book for Mahindra Mahindra Finance has increased from 17% to 34%. Cars again have decreased, auto utility vehicles have decreased. Look at the commercial vehicles and construction equipment, 18% to 66%. It has come to one third of its size. Look at pre-owned vehicles financing. Pre-owned vehicles financing was 16% and now it's 3%. SME financing has increased from 2% to 19%. So it is giving a lot of loans to small and medium enterprises that need financing for project finance, equipment finance, or working capital finance. Now we look at the growth numbers. So how much is 1 billion rupees? 1 billion rupees is 100 crore. So if I see 485 billion rupees was their loan book size in financial year 18, that means in 2019, and now the I'm sorry, financial year 18 is 2017, and now if I see 2019, I see the loan book has increased a lot, and it is now 650 billion. All right, revenues have also been increasing. So this is what you need to look for companies growth. So we see growth here, we see growth in loan book, we see growth in revenues. Obviously, if loan book is increasing, the revenue would also increase. Book value per share, so the value of every share is increasing. So as of now, quarter one financial year 21, that means June 2020, the book value is 186.7. Profit after tax is the problem here. Now this profit after tax is, why is it a problem? Why it has decreased? Well, the answer is impairment of financial instruments. Dig, 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 dig. Impairment of financial instruments. They have caused a hit in the profit after tax. This can be controlled in the future if impairment is controlled, if the industry, if the country comes back to its track, and after the coronavirus pandemic is over, which it will be over soon. Asset quality. Now, this is what you need to see. This is something that should be seen for every finance company or every bank. We see every asset quality was kind of controlled by financial year 19, but it kind of worsened by financial year 20. And now if I see in quarter 1 financial year 21, I see the gross NPAs are really high. Even the net NPAs are high. So this can be something to worry about. But they have done appropriate provisioning. The provisioning for this quarter is at 40%. So maybe they have taken care of the most of its NPA, and its profit and loss sheet might not be affected as much by the impairment of assets that might come in future, because it is accounted for in this quarter. About 40% of it is accounted for in this quarter. Now, shareholding pattern is 51%. Stake is held by Mahindra Mahindra Limited. Uh, Mutual funds have about 13% stake. Foreign institutional investors have about 23% stake. And the public, the non-institutions or the retail investors like you and me have about 11.85% shareholding. Top public shareholders are HDFC Life Insurance Corporation of India, Valiant Mauritius Partners Offshore Limited, Wishbone Fund, Kotak Funds, Vista Asian Opportunities Master Fund. So they've got a good number of public shareholders, mostly life insurance companies. That means they're good for long term, because life insurance companies, they invest considering long term, perspective in mind. They invest in long term shares in long-term asset classes that would give you returns over the period of 10 to 20 years, and not just 1 or 2 years. And Mahindra Finance looks like that share that will give you good, in fact excellent returns if you want to look at a time frame of 10 years. Now we would look at the price chart of Mahindra Finance. So it is trading at 207 rupees 90 paisa, about 208 rupees. I look at the 6 month chart, I see it made a high of 400 rupees. Mind you, the book value of Mahindra Finance as of now is 186 rupees. So it is pretty much very close to its book value, about 10-20 rupee difference. It made a high of 398 rupees about a couple of months ago, 7th February, it made a high of 398 rupees. If I look at 1 year perspective, again, same high, 398 rupees. 2 year perspective, it went as high as 500 rupees. If I look at 5 years, yeah, it went as high as 528 rupees, and this is a good sign. It is paying good number of dividends. In the past 5 years, it has paid four dividends, because one dividend is due this year, so it is paying dividend once every year, about 4 rupee dividend every year. So if I look at the dividend of, for example, 4 rupees, which they have been giving every year, the dividend yield is also 2%. So a good dividend yield and a good price. And of course, this opportunity can help Mahindra Finance increase its loan book, and maybe help investors average down, and making it a win-win for both themselves and the investors. And I feel Mahindra Finance is a good share, and if you're able to subscribe to these rights, please do, and it can get a lot of prosperity to you and your family in the future. So guys, this is pretty much it about Mahindra Financial Services, and I hope you liked my video. Thank you very much. Have a nice day.